Ramann, it's a pleasure to always be with you. I find every conversation with you to be very, very stimulating. And I leave away not only insights, but also questions in my mind. So for ladies and gentlemen, for those who still don't know Mr. S. Ramann, basically he is has a very unique distinction of having served in SEBI, having served in SIDBI, and now serving in PFRDA as the chairman. So from a fund manager perspective, he has gone from strength to even the greatest possible strength. Because fundamentally, we need domestic capital to be Atmanirbhar. And he has played a very, very key role. So I would like, thank you for joining us today. Let me just start by basically saying, at a macro level, what is your view in terms of capital availability for AIFs in India? It's basically, just to give a number, we estimate that not more than 60% of AIF funding is from rupee capital, and therefore that will put that number annually at around 45,000 crores, which I'd say, if I take some number today, it will be $5 billion. It's a very, very small amount. It's not even 12 to 13% of total VCP funding in the country. Your thoughts on how do we go in the direction of Atmanirbhar as a macro question?
Thank you, Gopal. It's always a pleasure to be here in your presence, and thank you IVCA for inviting me here. So I think we are all very keen that we utilize domestic capital. So in fact, when I remember the initial days at SIDBI when I was just getting to understand the industry, I mean, there were numbers being thrown around that 80% of the capital that's coming into the AIF industry is foreign capital. The numbers then keep changing, but I think what we are finding, if I were to take a proxy from the public markets, we find that the DII money has increased a lot within the public markets. So if FIIs were supposed to be moving the markets, at least they were at the time I was in SEBI, we probably find that the kind of daily average activity between FIIs and DIIs has equalized, and of late we are finding that the DIIs have a greater ability to influence the markets. Again, that word is not used in the pejorative, but the fact that the visibility of domestic capital is there. I would largely look at the AIF or the private equity and private credit markets as a function of how well the public markets are doing. And I really look at the fact that after coming into the role which I'm currently in, when I look at the pension fund, so there's 16.5 trillion rupees with the pension funds. We have given them a fair range of how to allocate those assets between equity, government bonds and corporate bonds. The equity allocation roughly is about 18% as of date of that 16.5 trillion. We find that the 18% has been largely placed in the top 70 scrips of the public markets. Upon further inquiry, you understand that conservatism is the only thing that I think we understand in India. It really surprises me that when you have a ability to go up to the top 200, and that's where the current equity boundary is, we have virtually nobody willing to look at stocks which are in the 100 to 200 range, which is so popular as mid caps. But it's probably therefore a better understanding of the wider risk return. So as pension funds, their job is to make sure that the money of the subscriber is safe, but also to ensure that there's a reasonable return. So I would look at the success of the private capital markets as instrumental in driving the behavior of institutional funds tomorrow. So we've got a great track record. So in fact, IVCA's own data shows that over the last 10 years, you've got something like 18 to 20% year on year or CAGR growth. Now that is exceptionally good. It's probably a little better than what the public markets have returned in the same 10 years. If we look at the ability of this capital to grow even more, because it's really about allowing this capital to grow much more in the long run. And therefore, I'm probably not answering your question as to where the amount or what's the volume of money that we're probably expecting. But just to give you an idea that between EPFO, the pension funds and insurance, we're roughly talking about 65 to 75 lakh crores. The mutual funds are already in that region. Totally, if we were to look at this capital, I suppose that would constitute the bulk of institutional capital in this country. There's very little apart from that. I would segregate this whole thing as mutual fund being short term, because typically that's how people have started using the mutual fund. And all the others, EPF, insurance and pension, especially EPF and pension, is certainly 25 to 35 year money. So I think we need to look at that growth separately, and I'm expecting that from the trends that we have seen in the pension funds, which has been roughly about 20 to 22% year on year growth ever since COVID.
My God.
Then you need to put that calculation on the current money of about 65 to 70 lakh crores.
And you know, I think you've said in your many remarks that India is underpensioned. So you probably require, if you take most countries, pension is equal to GDP. We need to be at about 10x just between PFRDA and EPFO monies. Having said that, again, we're just delighted with the steps that you've taken as chairman. You've now announced a composite scheme with the All Citizens Plan, where individual pension managers can then think about taking all citizens' money towards the VCP industry. But I have a quick question in the interest of time. How will this actually play out? Because fundamentally, each manager has a certain small pool to play with. Should we be thinking of creating some kind of institution where they can take money from different pension managers, maybe even from EPFO, and then create a diversification effect? What is a forward step in this direction now that your intent has been signaled in the form of policy?
Right. So in fact, the board of PFRDA 4 years ago had given a green signal for investment in AIFs, along with other instruments within the alternate category. And it did not work out for the very reasons that you were just alluding to, is that at an individual level, if people are allowed to switch in and out of the investment or the asset classes, then no pension fund is ever going to have the peace of mind to be able to commit long-term money. And that is really the only structural anomaly that we corrected. And we are now saying that, and it actually happened on the back of another announcement at SEBI, where they classified REITs as equity.
Yes.
So we, in that same step, we classified all the alternate investment instruments into equity and debt. And therefore, we have today got the ability to take any of the pension funds, whatever their size may be, they have an equity portfolio. Now, we are obviously assuming that it's going to be a growing portfolio. In a growing portfolio, whatever the withdrawals that might come about, even if you stress test it and say that withdrawals may move from the current less than 1% of AUM, and even if it were to go to 5% of AUM or 8% of AUM, you're still well within your ability to manage it from the existing equity portfolio. So we are looking at a centralized operation where we will have the skill sets sitting in, and again, you may blame me for sort of going back to the SIDBI fund of funds model, but I'm very familiar with that. So we are really trying to say that we'll create an NPS fund of funds, to put it very simply.
And would there be, one of the comments you'd made earlier before this was, if India creates a strong fund of funds platform for pensions, and maybe PFRDA and EPFO can even join hands, who knows. Would it attract, you think, the smaller foreign pensions to come and participate and create, because our goal, Raman, I just want to be clear, we have a common goal on 10x. You're saying that pension money should be at least 10x what it is today, and we believe that VCP money should go 10x by 2036, from 35 billion to about 350 billion in terms of annual investments made in this country, to about 4% of GDP, much more than China. So would that attract, would it crowd in foreign pension money?
It's a great question, because, you know, if we make our platform robust, transparent, and very, very credible, which I'm sure we will, I would be very happy for us to share the information. So effectively what is going to happen is that this centralized platform is going to do a selection of the AIFs, and there of course we can have various criteria. But once we have allowed the AIFs to come through, the pension funds will take the individual decisions of how much they would like to contribute. So assuming that we've said this AIF is fine for 100 crore contribution, then we leave it to the pension funds. And because there are several of them, we don't have a problem with the, you know, sort of fungibility of cash exists, because finally it is a NPS trust which is going to be on the cap table of the AIF. So, you know, that's the LP. So the LP is NPS trust. So effectively we're saying to any foreign pension fund that come and look at our process. If you're happy with it, we are willing to share this information with them too. So I think that certainly could become some sort of a catalyst for the smaller pension funds to be able to get the benefit of this, because otherwise it's very difficult for people to, for outsiders especially, to be able to assess the Indian ecosystem and understand who's who.
So I think all of us as fund managers, can we imagine a structure where there is a fund of fund type structure, whether it's a fund of fund or whether it's a CIO allocating money, where all the pension monies in India can be used to screen, select AIFs like us, and then our track records will be the truth to which they will hold us accountable and allow us to raise more and more money. It's a great news. In 3 minutes left, I have 3 quick fire questions to you. Question number 1, how do we get SEBI to adopt IFSCA style rules? So managers like us, for large value, I mean, this is your invention, accredited investor large value fund. I remember our committee. So how do we get SEBI to adopt IFSCA rules so we can then provide, say, an open-ended solution for you?
No, but in fact, I would say IFSCA is really providing that level of competition between regulators. So it is actually playing out before us that if IFSCA has a great idea, they go ahead with it. And I think it's great if SEBI were to respond and pick up the cues. So I would expect that if the goal is very clear that we need to allow better, efficient, you know, management of funds, I would expect these things to happen. And I'm sure, you know, there would be another committee in which you would probably chair it this time, and it will certainly go ahead with some great ideas. But one thing I would really like to add here is the fact that we need to look for long-term capital. I think this business of just sticking at 7 to 10 year funds, I for one, given the nature of pension money, would be probably give a few more, you know, points if a fund were to come and say that they're here for 20 years. I would be even happier with a perpetual fund.
And also open-ended, because they can keep contributing each year.
Correct.
So my second quick-fire question to you is, India has suddenly launched in something that is contra. That is the ability, that is the interest in risk capital. 1 lakh crore RDIF, before that the SIDBI fund of funds, now pensions investing in risk capital. Can we accept the failures that also come along with this risk category? How do we deal with the failure? Now I'm speaking to Mr. S. Ramann, Indian Audit and Account Service.
So I suspect that, you know, we would have guardrails for sure. And I think it's the ability of the regulator, and in this case the pension regulator, but we also have what we, in the NPS trust, we have a board of trustees. Now, these are the monitoring mechanisms that exist. And it's our ability to work better with other gatekeepers. So I mean, I'm saying if CRISIL has a benchmark today,
yes,
we need to work more diligently with that. We probably need to get some, maybe, other people to come in and provide alternate ways of looking at this information. And that's really where all
But
this...
there will be a car crash.
Certainly. I think we'll have to understand that a certain write-off is probably going to happen. It's already happened in some of the investments made, especially on the corporate bonds. Those names are well known. So we will probably have car crashes, but I think the diversified risks that we're already seeing within an AIF, there is a diversification already. So if I were to go back to the SIDBI fund of funds, I mean, in the initial distribution of money that happened, we were seeing about a 3.2x based on the initial contribution. So I'm saying if that 3.2x were even to half, and it would end up at the end of 15 years at 1.6x, I think to that extent government has done its job in ensuring that, one, it has created the ecosystem, and two, taken back 1.6x. So I think it's about improving our own skills to better discern between AIF managers. So maybe...
This is great. So basically, centralized platform for pensions to select managers and invest in them. Maybe use the information and experience to crowd in foreign pensions which are smaller. Fabulous, fabulous progress for our industry, and the willingness to accept portfolio returns as a proxy for individual risks that might underlie them. I have one last very quick question. Somebody stopped me in the lobby and said, all you big boys are taking care of yourself, right? So I see many of them sitting in front of me here also. But I am a fund manager, I am a micro VC with 100 crores. Mera paisa kahan se aayega? SIDBI to nahi dega mujhe. I don't have a track record. What do I do? So I know that you're deeply concerned about India's development in capital markets. Now just as S. Ramann, what is your thought on this?
So one, I think there's a lot of money in this country. There's a bounty of family offices in tier 2 and tier 3 cities. We're probably unaware of it. Maybe, some people are. There's money willing to chase good returns. So I think, we may be a big boys club here. You may be, sort of, rebuked and you're sort of the arrogant big boys club. But that's not necessarily true. What you portray will filter down to the others. So it's your behavior which is actually at test, and people are watching the way you are creating your ecosystem, because all good ecosystems will end up getting replicated. So I would suspect that given the amount of money there is, in fact, I keep saying this, that even if we were to look at the middle class, which is not welcome into this club, and I hope they don't come in, but the fact is that if we just keep them away from the Pearl Agro and the Sharda and the other such scams which we have seen in the past, their money would end up coming into these areas. So whether as angel or whether as whatever networks, I'm sure it will happen.
So we as quote-unquote big boys have to show the way. Or as Shri Krishna would say, Yadyad atrasi shreshta tatta devatare jana. So we'll have to follow his example, Gita 3:21. Thank you so much, Ramann, for being with us today.
Thank you so much.